We are beginning the week on a little bit of a downdraft here. NASDAQ is underperforming. I'm going to get to the bond market in a second, but I want to show the S&P 500 year-to-date chart and just kind of plot where we are and where we have been. We had Michael Antonelli kicking off the last hour talking about the 4-day thrust that we had, and you can see 1, 2, 3, 4 big candles there. Some of those over 2%, all of them over 1%. You don't see that very often, if ever. So strength tends to beget strength, but we've also seen before the S&P 500 stall on these rallies. So in order for this one to take place, I think we're going to have to get through this area, which we have just now kind of stalled at. Going to be a little bit more of a tough slog now that the heavy lifting is over, or easy lifting is over from that short covering rally. So we'll have to see if the current strength can beget more strength. Now, here's the VIX. We can see under 25 right now. The important thing to notice here is that the trend is down. And you can see over the last basically 10 sessions, even though we had some weakness last week, really didn't see that translate into fear in the VIX. Also taking a look at the 5-year T-note yield, if I'm reading this chart right, it looks like we are at another multi-year high. So not surprisingly, we are seeing the NASDAQ, which is heavier into growth stocks and not so much the value and energy stocks, we're seeing that underperform. Let's take a look at the 10-year T-note before I get to some heat maps. In very similar situation, although it doesn't look like it has taken out last week's highs just yet. Now here's the sector action that we're looking at, and I'm on a little bit of a delay here with my handheld, so we'll have to see if that pops up. But I would expect to see some of those value trades like energy, as we see right there. That is the biggest outperformer, up 3% on heels of another big move up in crude oil, guys.
And speaking of crude oil, let's pick up on that, Jared, and talk about the latest action there, because we've seen a couple of weeks of pullback, but then late last week we started to see a rebound in some of those oil prices.
Yeah, and it's been really rocky, volatile action in the commodities complex. That's what happens when we have high inflation. We see this before. When we're in a secular bull, we can have extreme moves to the upside, followed by those to the downside. Just think about what's been happening with zinc. They can't even hold that market open for more than a few minutes without hitting those limits. So here's crude oil since the beginning of the year. We can see the $130 high. After we hit that last week, it didn't really take that much news to just really take a lot of the wind, a lot of the air out of the market. So not surprisingly to see that we're coming back, but we're also, similar to the S&P 500, potentially entering an area where we might see shorts get interested. But we do have the bias to the upside here. The long-term trend for crude oil definitely up. And just taking a quick look at the other markets that are up in the energy complex, heating oil up over 6%, Brent crude up over 6%, wheat 5%. So if anybody thought the commodities bull was over, it looks like it's gaining some momentum again today.
And Jared, of course, another way to look at it is today we have more buyers than sellers in the oil patch. Jared Blikre, we'll talk to you later.